Moving ahead, in the dynamic world of startups and venture capital, staying ahead of the curve is crucial. Our next session will explore the latest trends and emerging sectors that are catching the eyes of venture capitalists. From cutting edge technologies to new market opportunities, we will delve into what makes these areas attractive for investment and how startups can position themselves to take advantage of these trends. To throw some light on the topic, please help me welcome our next set of speakers, Mr. Mayuresh Raut, co-founder and managing partner at C Fund, Mr. Yagnesh Sangrajka, founding partner and CFO at 100x.vc, Mr. Mitesh Shah, co-founder of Inflection Point Ventures, partner at Physis Capital, Mr. Amit Singhal, founder and partner at Fluid Ventures and Real Time Angel Fund. And to moderate the panel, we have Ms. Prerna Poddar. Also, there's a quick announcement that Blink Digital Workshop is going on in Iris. So all those who are interested to attend the workshop can show your presence there. Over to you, Prerna, and our esteemed guests.
Hello Surat, Came Show. I'll be moderating. I'm Prerna Poddar. Let's start by a quick set of introductions for us. So I'm Prerna and I recently completed my master's degree from UK. I did management international business and now I'm working with Ivy Growth. And today we are talking about emerging trends and sectors venture capital fund looks forward to. And if we are okay, let's just go for a quick round of introductions.
It's good to have somebody as young as you trying to moderate a panel. So it's really great to see youngsters involved. My name is Mayuresh Raut. I'm a managing partner at C Fund. We're an early stage deep tech focused fund. Our first check is in the $500,000 range. We tend to do almost 50 to 60% of our corpus as follow-ons. So some of our performers can see anywhere from $1 to $3 million. We all partners have been operators. We've run businesses for almost 20, 25 years. And we also have an understanding of technology, deep technology. Thanks.
Hi, good morning to all. This is Yagnesh Sangrajka, the founding partner and CFO at 100x VC. We are a very early stage pre-seed fund, VC fund registered with SEBI. We have 5 partners, started off in 2019. I come from a corporate background, used to be the CFO, investor relations head at various companies. And I've worked with Bessemer, one of the leading venture capital funds in the world. So yeah, we started 100x VC in 2019. We've made about 160 odd investments so far. Inspired by Y Combinator model back in the US. We've been lucky in getting good founders who've kind of raised almost $80 million of follow-on funding, post-R funding. So yeah, we have 160 companies in the portfolio and that's what we do. We are typically the first institutional check for all the founders who are raising out there and when they've started their business. So happy to be here.
Hi friends, this is Mitesh Shah. I am co-founder at Inflection Point Ventures. We are one of India's largest angel fund with a corpus of 700 CR plus, largely focused on pre-seed to pre-series A investment. And we have Physis Capital, which is a growth stage fund. So that takes care of Series A to Series B requirements for startups. Have a portfolio of 200 plus startups in our kitty, sector agnostic. Right, within this ticket size, we can take care of founder needs from a bare minimum of 1 CR going up to 2 million, 2.5 million as well. So sector agnostic portfolio, quite good success rate. And personally, co-founded IPV in 2018. Prior to that, I was CFO at Ola and CFO at Book My Show, one of the 2 large consumer success stories in India. Proud to be a Gujarati, proud to be, back in Surat in Gujarat, our very own Gujarat, and look forward to an exciting session and exciting day ahead. Thanks.
Good afternoon, everyone. I'm Amit Singhal. I run 2 funds. One is Fluid Venture, which is D2C focused fund. We invest at pre-series A level. So this is a 3 years old fund where we have invested in 10 companies from Fluid Venture. Our ticket size is somewhere between 2 crore to 5 crore rupees from Fluid Venture. Recently, we started another fund called Real Time Angel Fund, where we have a network of 700 investors. We invest at little early stage from the Real Time Angel Fund, and that is a sector agnostic fund. So the ticket size for the Real Time Angel Fund is 1 CR to 4 CR. That's what we invest. Overall, in 2 years, we have invested in around 25 companies. The total corpus of both the funds is around 350 crore rupees, which we are managing. And overall total number of startups which we have funded till now is 35 from these two funds. Thank you.
Thank you so much. It's genuinely my pleasure to be moderating you all. Let's quickly start with the questions that I have in mind. Which sectors or industries do venture capitalists believe hold the most promise for growth and disruption in the near future, and why?
Sure. So I'd like to widen the lens a little bit. Warren Buffett has famously said during the 2008 crisis, don't bet against America. I think we are slowly coming to that stage where you wouldn't go wrong betting on India. And why I say that, in a year which was supposed to be a funding winter, we attracted upwards of $20 billion in the venture ecosystem. In a year where all FIIs have taken out money, our public markets are where they are, purely driven by a retail investor. I think we are coming at an inflection point where slowly a lot of the local money is being driven into the Indian enterprises. Largely, it is still restricted to the public markets, but we see a lot of inflow into the private markets. Now, what are the sectors? There are two big dynamics that India is staring at. One is the population that we have in the consumption class. As of now, we have about 200 to 250 million people which are at $10,000 or even more per capita, people like you and I in this room. There's a huge consumption story waiting. I mean, hence this plethora of DTC brands, fashion, food, list goes on and on. The other dynamic is what the government is doing to address all those 2-3 big ticket items where there is a huge forex outflow. So they are attacking oil, exports, defense, and electronics. These are areas where India incurs the most amount of forex exposure. And they are attacking each one of these by various schemes. Schemes like PLI, schemes like PLIs for batteries, electronics, the focus on made in India for manufacturing, for defense, exporting defense, and throwing money after key pivotal technologies, which is semiconductors. Semiconductors is at the heart of everything that drives technology, and energy, which is clean and climate and green energy. So all these areas, startup founders, I'm not a fan of startup founders choosing the problem they try to solve by what are these factors. But if you happen to have a proprietary understanding of any of these areas, by all means, these are the sectors that are going to give enormous opportunities and returns for founders and investors, at least for the next decade and a half.
Yeah, so just adding on to Mayuresh's point, why we've chosen to be sector agnostic is we currently at a very, not very, but very nascent stage of startup ecosystem compared to some of the advanced countries like the US. So we're looking at something like a second wave, right? The first wave is started, according to us, when it was 2012 when the regulations came in. AIF started getting set up. You're looking at a second wave now, so which we call it as, at 100x, we call it the wave 2, where the next 10 years we will see so many sectors growing. And to his point, everything in India seems promising. However, when it comes to investing, you obviously deep dive into every single opportunity, just like you do in evolved markets. All sectors seem promising. We follow basically 5 core themes at 100x. Consumer trends, enterprise tech, financial services, which also includes fintech, manufacturing, which you can include industry 4.0, 5.0 in that, and clean tech and sustainability. So I think some of these 5 sectors, you will pretty much cover most of growth which is happening in India. And that's pretty much what we see. And hence we see a lot of opportunities in practically every sector, technology driven or otherwise. I think that is what we will see in the next 10 years.
So I think if you ask which sectors VCs like and all, the part answer to this question is fixed, because there are certain sectors which are evergreen and part answer changes every year, right? So there are flavor of the season. If you had asked during COVID time, obviously it was anything which is delivering things at your home or anything which is digital, content, edutech, quick commerce and others. Suddenly COVID went away, kids started going back to school and people think edtech sector is untouchable now, right? So nobody is any more interested in edtech surprisingly. We strongly believe that at the stage at which India is, especially at early stage when we are looking, wearing the hat of an investor, no sector is a written off, as well as no sector something which is just a complete go-to, right? So I think it's about the founding team's credential, it's about the problem that they are solving, right? India is a growing economy, it's 30 countries within one country, as we always say. So as you are able to crack within these regions, solve a genuine problem, offer a product which is helping the consumer do things quickly at an economical price. We are a price conscious country, yes, right? And right, monetize yourself also. There are things that can be done for free, everybody would love it. You start charging, nobody likes it. So as long as you are able to stay relevant, make money for yourself, run a profitable business, right? Startup investing is not about, making a business which is only guzzling money. If you're sustainable profit and loss you are able to drive, then every sector has enough amount of opportunities. And we also remain to be sector agnostic. Yes, there are certain sectors which will have certain preference because of the disruption that they bring about, right? Or the need of the hour they are. So we love clean tech, we love climate tech as of now. Fintech with certain amount of variations or certain new problem that they are solving, like debt resolution, or even insurtech, given the kind of low penetration of online insurance in India, right? So these are the sectors that we like. Consumer, as Yagnesh also said, it's something that we absolutely love. We are a large consumer spending economy, right? With an average population in the age group from 65% of the population in the youth age group, which has the spending power. So that sector is something that we always like, provided you are able to make money by yourself and not making Meta and Google richer every day by spending on digital marketing.
So I totally agree with Mitesh what he mentioned, that you will have to be relevant for the ecosystem. That's the extremely important part. The good part is that now we are moving from the scalability to the path to profitability for everyone. Now that has become the key, whether the profitability is visible or not. So that's very important, which has become. And as all my co-panelists mentioned, because of India population, the change in the middle class to upper middle class, we have seen the number, the consumption pattern is changing a lot. So that's how we build the thesis around that in Fluid Venture, where we are only investing in direct to consumer brands, seeing all the patterns. So definitely me as a fund manager always passionate about the consumer products where there is a probability to sell online. That's the one thing, because the world is now moving towards online first. Second thing which excite me the lot about health care products. So we are moving towards that trend where anything related to healthcare can do very well from again, this is because of India population. So if you are doing something in healthcare industry which is very innovative, something like that, that is the flavor, and we really like as a fund to invest in those startups which are related to the healthcare. Third sector which I like the most is data security, because now lots of data is there, everyone is working online. So anything related to security of data, that really excites us, and we give little preference to these sectors. Thank you.
So to take the question forward, like with the changing nature of work, Gen Z is getting into the organization, from someone saying 70 hours a week of work time to us saying we'll just get out once we're done with the work. Remote work, automation, how is it impacting the types of companies that VC firms are interested at?
See, you can always find something wrong in any statement that is made. But at the same time, you can't escape one fact that if you want to achieve something in life, then you have to have a period of a stage in your life where you are putting in those all-nighters, where you're putting in those 70, 80 hours. Elon Musk is, what crazy hours he's putting, right? But you look at any success story, no matter which stage of life you are, there would be a period of very compressed living that these guys would have done if they have achieved something meaningful in life. So I'm all for going out and having a work-life balance, but then you will have a average kind of a life. I mean, you don't have to believe me. You have to go out and look at everything that is out there in the public domain, right? How does it affect us? Startup, again, is a life that founders live. It's a very compressed form of living. These guys are some of the most ambitious, passionate people. People have to understand that being an entrepreneur is probably the most arduous undertaking any human being can undertake, right? And if you're not willing to do that, then you're probably in the wrong game in the first place. So everybody who's on Twitter and talking about you want to have a work-life balance, probably they are in these cushy corporate jobs. They are not startup founders. I don't think you'll have a startup founder making bones about this statement. The other thing is most startup founders are very outcome-driven. And what I mean by that is there will be periods of time where the life part of it takes a backseat, and there will be periods when the work part takes over. But I don't think that affects us too much. We don't have the luxury of being a Google where they stood for something, and then obviously that has been part of their DNA, and then once the management says no, you got to come back to work, or those 20% of do whatever you want goes away, people start going out on strikes. I mean, startup founders don't have that luxury. They don't have that paycheck. They're bothered about is how do I get the next my product out in the market, and how do I raise the next set of money so I can hire the best talent.
Yeah, so one request is next question Amit is going to take first, because Mayuresh has given all the right answers. I don't think we have too much to add, but no, that's on a lighter note. But just adding to what Mayuresh said, this whole question if it was around work culture, please understand that the founder journey is very different, right? If guys who are joining a founder or are being part of the core team understand that you're going to invest that first 2-3 years and you have to give it all, right? All things about enjoying after work or having work-life balance is true for, a corporate employee. Probably that is, as he rightly said, I think that culture there. The startup culture doesn't really have a work-life balance if you really want to be part of the core team. If you're not part of the core team, then it's understandable, because there are no expectations from a non-core team member. From a core team member, a co-founder, a founder, it's 24/7. That is how founders have to work, right? And while people can take some off break and all of that, but typically they'll be on the roll. Like either they are talking to investors, either they're talking to their customers, trying to figure out the product. It's constantly on the go. So I think that is what we look at. We want to see passion, we want to see hustle in any founder that we talk to. And that hustle is very clear, when somebody is pitching to us. We just ask 5 questions and you will know whether the hustle is there or not. It's very easy to identify. And that's what we look for as VCs.
So I think this whole discussion around work-life balance coming from Mr. Narayan Murthy to Mr. Elon Musk and everybody's, I think it's pretty overrated. I feel that every organization finds its own balance. I've been part of Ola where a 16-hour day used to be considered to be a normal, right? We'll be talking at 12 o'clock in the night like it's a normal day call. With 10 people on the call, right? So quite normal there. I work for Book My Show, which was like very, very sane in terms of timing also, right? We'll have a very structured life balance, right? And no work over weekends and all. That actually helped me set up IPV while working with Book My Show itself. But I think both were at a different stages of evolution, right? One is a 20-year-old organization, though a startup, and yet growing at the same time. One is something which is disrupting the entire mobility space and all, right? At IPV, we make sure that our average age of employees is 25. Right? So we make sure that they work, whatever 8.5, 9 hours they work during the day, that's the most productive. We really we don't expect them to be available after 7:30 in the evening, unless there is absolutely need. So I think it's about the mindset that I am a 24 by 7 available employee. We need not really work or slog that much. Most of the time we see that people just take pride in saying that, okay, I'm available all the time, I work 7 days a week. I actually see it as a negative thing, right? Why do you need to work 7 days a week? 5.5 day. We are a 6-day week company, by the way, right, at IPV. But doesn't mean that everybody has to slog really hard on Saturday. It's depending totally on your work. You know, work from a swimming pool or work from office, it's about output-oriented approach rather than input. So I'll never take pride saying that, okay, I work 70 hours a week or 80 hours a week. It's about the output that we achieve during that time. That's most important.
So as Yagnesh tried to delegate his work to me, so I believe for every organization, delegation and proper planning, these are the two key areas where founders should definitely work. As other panelists mentioned, that there is no shortcut or there is no alternate for the hustling that we will have to do as a founder. Definitely, there is no way we can avoid the daily routine of pressures as well. But I believe if as a founder, you will create a culture where there will be proper planning for next 3 months, there is a proper delegation, there is proper roles and responsibility among the founders itself, that will help you to avoid mental stress on the team. So that's what it can be done. But definitely as a startup, 16 hours, we can't avoid the firefighting things in our life. So my honest suggestion is to work on the planning and delegation. That will resolve most of the things in a startup.
Is it amazing. Safe to say planning, passion and dedication is what venture capitalists look for. Apart from that, what are the key considerations while evaluating in sectors that are heavily regulated or undergoing significant regulatory changes? Let's start with you, Amit, sir.
Yeah, sure. So definitely in India, regulation changes are such which always create a pressure on all type of industry, considering fintech, considering consumer tech, healthcare products. So these changes are always affecting the startups. So as a venture capitalist, we always try to understand that what can be the potential changes which can be happen on that. And definitely if we are investing in those sectors, that create additional pressure on us as well as a investor. But having said that, in case there are certain regulatory aspect involved in any kind of startup, that give us an additional confidence as well, because that create entry level barrier for the other competitors as well. So there are positives as well, where the company can be killed by these regulatory changes, and there can be positive as well, because these create entry level barrier to we as a fund try to balance between that, and based on that we select the right startup considering all this aspect.
So what I'm going to say might not, all of you might not agree with it, right? But as an investor, I absolutely love sectors which are regulatory challenged. Why do I say that? Having been part of Ola myself, initially when I joined as a very small pre-series A company, there were a lot of regulatory hurdles. People didn't understand it's a tech cab aggregator and not a radio taxi company itself. Cabs were getting impounded, chalan ho jata tha, raste pe traffic police will do it saying that, okay, you don't have a radio taxi license, right? Yellow number plate nahi hai, and a lot of other things where there were Merus and tap cabs and gold cabs of the world, which were authentic radio taxi under Motor Vehicle Act. So we had a very hard time yet consistent, persistent effort in educating the lawmakers to say that, okay, this is a new way of doing business. Our laws were made when mobiles were not invented, right? So we have to understand that it requires some sort of liaising, some sort of education to be imparted even to government. And the government is very open. They are always willing to learn, but everything for an elephant to dance, it takes some time. So we had some tough time educating the government that it's a tech company and not a taxi company. And today you see Ola, Uber, all the cabs having their own, designated areas outside airport, railway. So it's a defined way of working, right? The online e-pharmacy medicine delivery was considered illegal just before COVID came. And during COVID, it became way of life. So regulations will change as per the consumer needs, as long as you're not doing anything which is illegal, right? Of course, you can't be selling drugs online. You can't be selling liquor or some other banned products online. Those are clearly a no-no. But as long as you're serving a genuine consumer need, like Ola, like a lot of other businesses, right? And we have seen that in fintech as well. We have seen that recently the entire online real money gaming industry totally crippled by the changes around the taxation and all. Does that mean that all of them will disappear? No, I think smarter founder actually will find an opportunity out of this. And that's why I said that regulatory challenge is something that I totally love, because the outcome can be significantly different. My downside risk as an investor in this business will be 1x. But if these guys are able to survive, educate the industry, right, and sustain and create a large enterprise, imagine the outcome that you will have as an investor, as an employee, as somebody who is an ESOP holder, or as a founder also. So this is something that everybody needs to kind of evaluate based on the industry and based on the need that they're serving.
Yeah, so just to add on to Mitesh, agree with his point completely. Founders need to understand first the space that they are building their products, building their companies around. And part of that research actually is that you're supposed to know the regulation, right? And I know it's very easy to say this and very difficult to implement it. But unfortunately in India, and I'm saying this unfortunately, government is also learning as we go around, right? When new businesses emerge, government also learns those businesses. And then if there are any malpractices or possibilities of malpractices, they will bring in regulation. Now, this is a little bit of a reactive approach by government. Now, but so it is. There are advantages too, right? In an uncharted territory, obviously you get a first mover advantage if you're working on something very radical, very transformational or very disruptive. It gives you the first edge. And by the time the regulation catches up, you probably have grown pretty significantly to kind of figure out those things internally in your company. So it's not that regulation is bad. Regulation needs to be understood well, which I've seen, we've seen founders really, it's more of a fear factor. They don't really understand regulation well and, probably close down halfway through, which is exactly what should not happen. Founder's job is to kind of hustle around, figure out a way, pivot, and smart guys do that. So I think that's the bit on the regulation bit. But I think regulation is now coming in slowly. People will see a spate of regulations. We've seen it in fintech, we've seen it in gaming industry. There'll be more in social security, right? Cyber security, quantum, all of those things will get regulated. Doesn't mean startups stop building startups in security, right? So that's what it is. That's how our take is.
Our view is there's a lot of nuance here, right? Regulation has always historically and even for the foreseeable future lag behind technology. That is just the way things is. Regulation has to take care of the lowest common denominator in terms of serving the interests of the common man. And when you cast a net that wide, obviously it's like a hammer. Anybody wielding a hammer will see a nail. That's the nature of the beast. But having said that, the way we approach things or businesses is clearly regulation gives a lot of moat. But provided you can work with the policy makers and you have some seat at the table where the policy makers are thinking around a regulation and you are investing in those sectors, we are more than happy to do that. And I'll give you an example, right? We have a commitment to our investors that we wouldn't invest in any sectors where the regulation is not clearly defined or there is a possibility that the regulators will have a downside view of it. Take crypto as an example. I have been a prolific investor in cryptos as an individual, but if I had invested in cryptos as a fund, it was probably dark days for at least a few years before the government again went back and rethought about what they wanted to do about it. But there are several other sectors, and I'll give you examples about drones, about quantum, about AI, where we are working with, not on the AI piece, but at least on the quantum semiconductors, drones. We are working with regulators, and they are extremely open in having a rethink about how these sectors are done. In fact, the drone policy that India has is probably one of the most forward-looking policy. It is a very hands-off approach. They've just gone out and defined areas as green, yellow, and red, and within that, they are free to do whatever they want. In fact, we have a drone logistic company which is actually transacting business without even having the equivalent of a DGCA. So the nuance here is clearly regulation is a great moat. If you have founders who are going after areas where they can play an incremental role in working the government, working with the policy makers to swing regulation, not just their favor, but the entire sector's favor, those are the guys that we obviously back a lot.
Amazing. Definitely a lot to read and research about. So let us if you all have anything in short to wind up and say something to the audience, to us from your end, if you all have anything to say, to just add on to it.
Okay, how many of you over here are founders or part of founding teams? Okay, quite a good one. How many of you are angel investors over here? See, very few, right? And that's my point. I think we are part of very vibrant economy. I have been part of startup ecosystem for more than a decade now, right? And not for the wealth creation part of it. Obviously, all of us, paisa to sabko banana hai. Everybody wants to be rich. So for me, that's the byproduct of it. But I think the sheer learning and the sheer, dynamism that's there in the ecosystem, right? I'm on the wrong side of 40. And every day I learn from people who are half my age, right, at 20, 25. And the way they think about business is totally different. I encourage all of you, to be part of startup ecosystem as an angel investor, if not for anything, right? And if you are part of a startup ecosystem as founder or as part of core founding team or working for a large startup, you will definitely see the change in yourself in terms of the way you approach things, the way you look at problems, right? The way you solve problems, right? And it's a great ecosystem. And we are still scratching the surface. I think next decade till 2030, we'll see startups kind of rising even further, right? So today, I think there are just about 100,000 startups in India, and there are just about less than 100,000 angel investors in India. But I see that this industry is where mutual funds were in 1980, right? If you see the overall decade or 2 decades of build-up, right, you will all be benefited if you are part of this ecosystem for the next decade, and that's where the growth is going to come from.
How many folks from Gujarat, Surat, Ahmedabad? Okay, so आप लोगों को धंधा हम क्या सिखाए? It's in your blood, right? But we've been working with several state governments from 2014, 2015. And Gujarat never figured in the startup or tech scheme of things. And it always left us scratching things. I mean, now you have Hiranmayaji and Paniji driving a lot of things. And it's great to see Gujarat finally getting the accolades it deserves in whichever way those metrics are reported. But is that translating into a lot of venture fundable businesses? A beginning has been made, but there is no reason why Gujarat can't figure, I don't like unicorns as a word, you're barking up the wrong tree, but viable, fundable businesses, having a deep and broad talent pool, having a set of founders who've gone out and achieved something and start giving back to the ecosystem. It's about time that Gujarat starts pulling its weight. There are all of us. Gujarat is clearly a destination that we want to visit more and more. As Hiranmayaji said, money is more than available. We are more than happy to come down and share our experiences. But it has to be supported by the local ecosystem. The other thing we find clearly is money. There's no lack of money in Gujarat. The local folks have to start backing their local founders. Guys like us will come in and do our bit. But the initial seed capital from all ecosystems that we work with has come from the local businessmen, first, second generation, tradesmen, people with money. Please start ensuring that Gujarat starts pulling its weight in the tech and startup ecosystem.
Yeah, so I have asked to give one suggestion. So my suggestion from the funding perspective is that don't change your idea based on the funding news. So most of the time what we see that you have some idea, but you see there are some funding happening in the similar space with a different idea. So my honest suggestion is believe in your idea, believe on the solution what you are creating. Pivot is but obvious, means definitely based on your learning you will have to change the idea, but don't change because someone else is getting funding on something else. So be focused on what you are building.
Yeah. So yeah, I'll kind of go last. My only kind of 2 cents of advice to all founders here. Investors will eventually find you guys, so don't worry about the investors. If you're doing a good job, investors will come looking for you. That's what we believe as investors. But as startup founders, focus on 2-3 things, right? When you start, first of all, make sure it's a huge opportunity. Sometimes what we look around us seems like a problem and we start solving it. But please understand, as Mayuresh was saying, we want to back venture fundable businesses, which means it has to multiply geometrically. At least it should be. Whether it is or not is a different question, but it should multiply geometrically. So find out businesses who can grow like that. It's a big enough problem to start with, which is what will give you a large market opportunity to work with. Find out, guys who believe in you, in your idea, in your product, next to you. Find someone who is able, if you're not able to sell your idea to your friend, to whoever you're talking to, you're not going to get a co-founding team or a co-founder. So look for that, try and convince. Don't start just because you want to do it. Cross-check that idea, do as much deliberation as possible, because एक बार आप चालू करोगे ना, फिर मुड़ना नहीं है ना, then even if you're making a mistake, it'll be a very costly mistake for you in terms of time or whatever that is. So do some proper research, make sure you have enough material, you have enough things to start on. And then, add on the pieces, find the guys who build the product, make a complementary team, whether it's a co-founding team or a core member team, doesn't matter. All of that can be figured out later. Believe, find out people who are believers in you and then start. That's a single piece of advice I think I will give.
Thank you so much. On that note, let's find up this.
Thank you so much for your valuable insights. I'm sure here in this summit, you will find many believers in you and your startups. And please, a round of applause for our esteemed guests. And I would like Mr. Pramod Poddar to please come up on stage and felicitate our speakers and panelists. First, we have Mr. Mayuresh Raut. Mr. Yagnesh Sangrajka. Mr. Mitesh Shah. And Mr. Amit Singhal. Thank you everyone. This mega event that we are witnessing right now, that we are part of right now, wouldn't have been possible without our sponsors. So I would like to again thank our co-host, Steamhouse, our title sponsor, Ayani Diamonds, our platinum sponsor, OneSpace, Wrap to Earn, Spread, Build It India, Zebra Learn, Avime Herbals, our gold sponsors, Regrip, Curate, Decimal, Council-Wise, MVT, One Oneza, Lexicon Legal, Touch Films, The Laundry House, Indulge Concierge, Sandcup Design, Curlin Professional, Khushi, the Juno Moneta Tower, My Value Trip, Print Bricks, Blink Digital, Wadhwani Foundation, Grip Invest, 360i, Arham Share, and Tech Cloud. Thank you for extending your support for making this event a mega success.